Stock market today analysis for Wednesday, January 18th, 2023. I put some volume on these different charts. This volume can give you an indication of how strong a potential movement is. What's the likelihood to, for it to keep going? We'll look at that just a little bit more. Before we get into that, I want to remind you that in the description of this video below, there's a link to ihavesuccess.com. Even though we're going to talk about a lot of different things here, the mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options. And I have a selfish interest in this, to do it in a way that helps me grow and improve in the process. Because as this yogi says, if you want to master something, teach it. I know a little bit more than just selling cash secured put options on stocks that I wouldn't mind owning. However, even though I know some more complicated strategies, it is my go-to strategy. And it's mainly because upon contract expiration date, I win no matter what happens. Either the contract expires worthless and I keep the premium, or I get assigned and I keep the premium and I buy an income producing asset that I want to own. So it's really up to you. If you want to learn a little more about it, in the same description below this video, there is a playlist. A little bit below the link to I Have Success, there's a playlist that says Trading Options for Beginners, beginners in all caps. Watch those 5 videos. It'll show you how to set up some charts. It'll give you definitions of things. It'll show you how to use the Yahoo Finance screener tool to screen for stocks. And also, get at the minimum, get this cash secured put stock selection guide. It'll give you not so much what to fundamentally look for, but it'll give you some insight in how to select stocks to sell cash secured put options on. You can grab this one too, 3 stocks I sell cash secured put options on. These might not be suitable for you. It's not about these particular stocks claiming that you should sell cash secured put options on them. Just read through it and see why I particularly like these. And then when you're looking for stocks that are suitable to you, keep these things in mind. You can grab the stock option Greek cheat sheet. It gives you a 1-sentence definition of the different Greeks. It's handy just to have as a quick reference. And if you really want to bring your life to the next level, get the 3 underused tactics to transform your financial results. They're listed in difficulty to implement, with number 3 being the most financial one, the hardest to implement, but financially will give you the most bang for your buck. With that, the last thing I'll do is leave you with a link to a video that right now we're at 3 minutes and 20 seconds. In 10 seconds, it's going to pop up right here. So go through and watch this video, but remember at 3 minutes and 30 seconds, 3-minute and 30-second mark, right here, it's popped up right there at 3 minutes and 30 seconds. There's a link to like 5 reasons to sell cash secured put options. It's not so much how, but it's like understanding why this is good, no matter what your situation is. Because here's the reality. It's 2023. If you have a bank account, if you have an internet connection, and if you spend money at least once a year, you have no legitimate reason not to be selling cash secured put options. If you say, well, I don't want to do it, that's not a legitimate reason. There's a lot of things that you don't want to do and you do anyways. So it's time to get on the gravy train of the cash secured put stock, of selling cash secured put options. We're looking at futures right now. We'll go through this relatively quickly so we can get to some other things. But we see the futures, which you notice in all these futures right here, it seems to be missing a volume bar, right? That's because there's a new candle that just opened up on all these futures. And we see the VIX, boom, popped up today. Futures for the S&P 500 won't drop down. We're going to see that these are futures for the 4 big stock indices, and we're going to see the same thing, basically looking the same in those actual indices. Big down candle. I want to point out, especially on this one, right? This day, so we had had this big bull candle, this bull candle, this bull candle right here, and then 1, 2, 3, 4 days later, look at it, wiped out all those. Basically, it's back to here. Same thing with the Dow Jones futures. This big bull candle right here, huge bull candle, right? 1, 2, 3, 4, 5, 6, 7 days later, a week later, we are now in kind of like, where's the 50% mark? Somewhere in there. We're basically just in that 50% mark, the bottom 50%. That's not a bullish sign, but I guess you could say, well, it took 7 days instead of 2. Sure, you can say that. Over here in the NASDAQ futures, not as strong of a sell-off is these two. So the technology stocks, for some reason, didn't sell off as strongly. And for this last bull candle that we have here, see, we're still kind of maybe in the top 10% or maybe over it, maybe above the top 10% for that candle. And here, we pulled back again all the way to in the bottom 50% of that range. Now, Bitcoin, we saw a spike up in Bitcoin. I just read a very interesting article from Bert Dorman about I think it was January 11th. Some things happened in concerning airports in the U.S., in the Philippines, and in Canada. Now, it might have been right around January 11th. It might not have been exactly on. Maybe one day was on. Maybe it's 2 days later somewhere else. You can find that article if you want to look for it on Zero Hedge. But it was talking about how there might have been a big buying of Bitcoin that was kind of kept on the DL because possibly the rumors that Bert's hearing is there was a bit of a I guess hack in the old airline industries, and maybe these hackers needed or wanted Bitcoin to be paid off, and so he's speculating that this big spike up here, which was when where's our date right here? This is the 12th, so that would kind of make sense if it happened on the 11th. The next day, you see it a lot of this buying of Bitcoin, because if you're going to give somebody Bitcoin, you either have to have it or you got to go into the market and get it, right? So that's a speculation, and maybe you say, oh, that's a tinfoil hat speculation. Okay. I don't care. You can, if you want, you can give Bert Dolman a call, and why don't you debate it with him? I'm just telling you what he said. I don't really care. So go have at it with Bert. And silver basically has been going sideways. Now look, we have this big bull candle right here, right? Where are we at? Where are we at? We're in the bottom. We're in the bottom 50% of it, but it's not all the way down here. It's like it's not. It's obviously we're not trading above here, right? That would be more bullish, right? But look at it's taking all these candles and it's still not at the bottom of here. So for some reason, right in this area is a lot of support. Gold, on the other hand, still seems to be continuing at the moment. Seems to be continuing this this uptrend with a bit of a pullback. Now we're here into the second candle. Prices came all the way down here, but closed in the bottom 50%, but not all the way at the bottom of it. So we'll see what's going to happen. It could pull back a little more and then go up and continue being in that bull trend. But this one obviously is sideways. Natural gas continuing to just kind of move down, and crude oil. Poking around this 82, pulled back over here to 79. Seems like might have a top in, not a permanent top, but a resistance around that 80 buck area. 10-year treasury yield futures really came down quite a bit today. Our general markets I already looked at Bitcoin. We already looked at oil and gold. 20-year treasury continuing to move up. Now, what's been happening a bit, big spike in volume there. Last 2 days wasn't. This one spiking. What has been happening for a while, a couple years, couple months, I'm not sure, but for some time, that stock market has basically been following TLT. Someone was dropping here, going up. Is that coming to an end? Will these prices rebound? We will see. The dollar hit a low today for the month, 27.13. Open, I guess it really didn't open on that low, but dropped a little bit past where it opened and then rallied up. Seemed to be hitting this kind of that resistance right in there, with the volume looking a little, less than this line. When you see that yellow line, that's like a 50-day moving average line of what the volume has been average in the last 50 days. So if you want to see, like, you can check your volume, and if you see like in here, right, you see this gold contract, look at that. There's a lot of volume coming in there. Look at oil, a lot of volume. It's this, not much, right? This is letting us know that whatever's going on, there's a lot of contracts being traded around there. Now these, they just don't have volume indices. So VIX spiked up yesterday, sold off just a little bit, poking above the 20, but still, this is relatively low for the VIX, right? High of for this month, or the last 30 days or so, high of about a little over 24, right? So 20 in relationship to 24, it's still kind of on the lower side. It's got a bit to pick up, and if these stocks keep dropping down, though, we probably see the VIX climbing up. And these indices, you see the S&P 500 really sold off today. Same thing with the Dow Jones. Same thing with the NASDAQ. Same thing with the Russell 2000. Let's take a look at these 12 different sectors of the stock market. And so we see technology sector really had a big selling off today, with the volume hitting or a little bit over that average daily volume, where look at the last 2 days, even though it's a pretty big candle moving up, really low on the volume, right? Had a lot of buying volume in here, then it kind of tapered off. So sometimes you might be able to look at that and just, then you wouldn't be surprised if you see something like this. It's not a guarantee, but gives you an idea. So, over here with healthcare has really broken down. For a while, it was a very strong sector. It was more looking like this. And see, it's a really strong amount of selling volume came in today. And just really, boom, sold off. Back to, like, right, it took this candle, we can do this in reverse. This candle right here sold off here. And then you can kind of look at what's the strength of the downside or the upside. By how many days did it take to get back up to the top of this candle? 1, 2, 3, 4. 4 days. It didn't even fully get back up. I mean, it traded up, but look where it closed. It closed right there. 4 days, okay. The 5th day, it's back down in here. The 6th day, look at that. A week later, and it's not recovering. So that is looking, give us a bearish indication. And then again, with major spike in the selling volume. Now, if we saw like a major movement in pricing, but we're seeing this type of volume, then it gives us maybe an indication that maybe it's not as strong. But we'll see. We'll see how we want to see like a couple days of follow-up when it had been moving up a little bit. So just look at your volume as kind of like a secondary indicator, give you an idea of the strength. And again, like, none of this stuff is like, the only thing that we 100% know for sure that we can absolutely say is we can absolutely say that in the last in the last 30 trading days. The highest XLF got was 36.17. The lowest it got was 33.19. We can absolutely know for a fact that this 200-day moving average right now is at 33.89, and it closed today at 35.21. But as far, and we know for an absolute fact that the volume is what's that, priced in millions, right? This a little over 53 million, right? Okay, so we know those things for a fact. But do we know for a fact it's going to go up or down tomorrow? No, we don't. We're just looking at a variety of information and trying to make our best guess. So you see, lots of it had been moving up through this really low volume through there. Started getting more volume in here, and kind of been picking up. So had a lot of, this candle had a lot of volume. Even this candle, red, but a lot of buying volume to push that in. Sometimes I look at that, if it's a red candle, but there's all types of green buying volume to make that red candle, I'm wondering, what's going to happen? So maybe maybe this rally isn't as strong as it appears. So a little bit of sell-off in the financials, and we see it took 2 days, and this big bull candle right here, where took 2 days later, we're lower than where it started. All right, so the next real big candle would be this one. Right? If we see prices start taking this out, which we got this pivot low right here, but maybe things will stabilize around 35. If I remember right, it can kind of see it right here. Like it touched 35, pulls back, kind of goes up. I think if we looked at about a year's worth of data on XLF, we'd probably see 35 being having a place where prices get stuck on either side of it. XLI, industrials, again, that really sold off. So same, you can figure that out. Another thing to kind of keep in mind is generally speaking, about every like 10 or 11 days, there's a bit of an adjustment. So let's count back. Let's actually do it with this. There's a low volume on there. Let's do it on this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, so here, right, it's kind of going sideways. Day 10, for some reason, 10 days ago, kind of went up. That doesn't surprise me that it worked out that way. Sometimes it's not exactly like 10 days, but it could be 8, could be 12, but somewhere in there it tends to do something. Again, it's not like you're not trying to bet the farm on the 10th day. You don't want to do it like that. Just add a little, a little something to what you're looking at. The selling volume. Look at selling volume for almost, looks like all these ETFs except for this one. This energy was probably the least amount of selling volume. Basic materials sold off today too. Not as much as industrials. Over here on the communications, yep, not as much of a sell-off over there. It could maybe it's still going to continue that bull trend, but it's been going up on this kind of weak volume over there. Energy sold off a bit today, and it's been volatile, but still seems to be doesn't seem to have broken its uptrend. See what it gets around this pivot point right there, little. See where it pulled back. Prices right here, pulled back to this low point, and kind of took off since there. So it might drop down here, take off again. Sometimes that's what you want. That is what you want to see. If it's going in one direction really strong, you don't really want to see it just like going. What you kind of would like to see, instead of it just doing like this, maybe you want to see it go. Right, you want to see it more of because if it's just dropping like this, sooner or later, people that shorted, they sold to open, they need to buy to close, and you might get a whoa, big spike up. So sometimes it's a little more, I guess you'd say maybe organic or something. I don't know. That's just, I don't know how to explain it really well, but I've heard this for a long time. Like when you just see a big drop like that, you might see a big spike back up. If you want to really play a position to an upside or a downside. You want to see it kind of having those pullbacks, right? Because a lot of times what's happening in these pullbacks are people bought to open. Now up here they start selling to close. When they start selling to close, it you know, pushes prices down. When you buy, it pushes prices up. When you sell, it pushes prices down. Same thing. You know, if it's dropping down, right, prices going down, right, they're gonna sell to open, which pushes prices down, but they have to buy to close their position, which pushes prices up. And then you got that. You got high, lower high, lower high, lower high, lower high, low, lower low, lower low, lower low. I mean, that's you know, if it would only be that easy all the time. I guess once in a while it might be. Same thing here. Low, higher low, higher low, higher low. Right, but that's what you got. It's a little bit bonkers. So big sell-off in consumer staples, big sell-off in utilities, and I think these had been kind of like those defensive plays. Consumer discretionary, not so much of a big sell-off. Retail took a bit of a dive. Real estate, not as big compared to this. Like that really was kind of up here at the top of the range and boom, down to the bottom. Let's look at, where did I put this at? Which one is this? Daily. Switch this like this. I gotta save that. All right. So we got a daily chart here, weekly chart here, and this is hourly chart. I'm just gonna pull that hourly chart. Just gonna pull that out of here for now. Don't worry about that one. Look at the SPX, not the SPX. Let's look at the SPY. So we got some volume. All right, SPY. Don't worry about this line. that's this channel. I'll end with. Okay, well we'll look at that real quick. Just super quick, so you know what the heck what's going on with that. So where? All right, so SPY. All right, we see that it's kind of been in this channel, right? And now it's broke out to the top of this channel. Broke out to the top here. Tried to break out to the top here. Kind of did. And you know, it's a little bit subjective of like where we want this line to be. But if we're connecting this top right here, that top right here, you know, I put that on there a while. If I start adjusting it now to like, hey, it's still in the channel, it's like, you know, I don't know about that. This point right here is connected. That point right here is connected. So, you know, close enough. Is it going to pass? Is it going to pass for the, you know, thesis for the college professor? Maybe not, but it just needs to pass to make Brent money. That's really what it needs. And right now we're on outside of that channel, right? We broke out outside of the channel. It pulled back. It came. Look at that. Came right there. Boom, back up. But we got high, lower high, lower high. So that's why these lines are right here. Now let's look at the volume. So volume on not volume on Apple. How about volume on S&P 500? So the volume on the S&P 500, right? We had spiked up today. Where's that candle right there? That volume, this volume bar. Ooh, look at that. So I can't say this with like as a fact, but when I see this kind of like that sort of candle, a candle like this, if it takes a lot of volume to make that, right? If it takes a lot of volume and we get this, okay, that's, to me, that's something different than taking a whole bunch of volume, which is basically like energy, to create this, almost a doji. That means almost opening and closing in the same spot, like whoop-de-doo. So it's like, you know, when I see stuff like that, when I see this low amount of volume, it doesn't shock me that that we'd have a bit of a, you know, a pullback, because it just, there's, think about that running analogy, right? If you're going to sprint, you're putting all your energy in. You can't go, if you're putting 100% energy in, you can't put 100% energy in and go as far as if you're putting 70% energy in, right? When you put 70% energy in, you get to go further. You go slower, but you go further. So it's, in a way, that is definitely not a perfect analogy, but in a way you can kind of look at it like that. Like, here's the average, right? This line, average volume for the last 50 days. And for some reason, we're falling short, but we're moving up. So ultimately, right, if you bought here and you closed here, who cares what the volume does? You profited, right? You're not necessarily going to turn money away because it's got low volume, but maybe you just sort of, you're careful about of thinking like, yeah, you know, it's going to pass 410 on this low volume. Maybe to really break out of this 200-day moving average, maybe it needs a little more than that. So we see on the weekly chart, right, 1 year weekly volume has just been hasn't even for one. I know this week we're not fully done. 1, 2, 3, 4. 4 weeks. 4 weeks in a row, right? So like a month of trading, volume is not even. This is the closest it got to hitting that average volume. And that's all selling volume. This one right here on the 5th week, all selling volume. Right, so we got to go back for a green bar to even be close, which would be right here. We got to go back. We're going to count this week as one. 1, 2, 3, 4, 5, 6, 7, 8. Like 2 months ago, right? 2 months, 8, 9, 10, 11. 11 weeks ago. It's like 11 weeks ago. Look at that. Look at all that volume up here, right? That's completely different than this. It's looking like this week stuff. So let's take a look at the Dow Jones. I found an ETF so we could see some volume on the Dow Jones. A little more volume on the Dow Jones, right? Obviously, a lot of selling volume today, but we got a green. We only have to go back 1, 2, 3, 4 days to hit that green. In the weeks, 1, 2, 3, 4, 5. Right, 5 weeks ago, almost right there. So it's been a little more volume trading up, but still it's not like this, right? Look at all that. Now that was some power to the upside, right? Look at the amount of green compared to the red, all in this area. It's like maybe there's a little more, maybe it's 50-50, and even if it's red, there's like it's just way more transactions going on. So again, I'm just let's see. Qs, not surprising. Okay, it seems a little closer to those averages, right? But it's still kind of low volume in there. When we look at weekly, yeah, low volume. Going back here, so really had some volume in there, and just kind of seems like it might continue to sell off. And IWM for the Russell 2000. Right now, we got more volume coming out over here. Even though on these up candles through here was kind of that light volume, but it's moving up. Again, don't take this as like using volume shouldn't be your primary focus. Price action should be your primary focus. This is a secondary thing to look at to try to give you some gauge of how strong is price action in a particular, direction. If you don't, you can really think about sprinting. Like especially it's been in the whole stock market's been in this down market for a while. If it's really going to break to the upside, it needs energy to break to the upside. And if it doesn't have energy, could it still happen? Possibly, but the likelihood is a little bit lower, right? So we'll go back to looking at this line chart. I have no idea if you heard me say this, but I know I've heard myself say this a lot of times. Like I see a bit of a range that's happening here. I see a range through there and a bit of a wider range down through here, right? And kind of up through there. And so, you know, where is it exactly? It's not exactly like 420. It's not exactly 360. It could be kind of like, you know, depending on the equity you're looking at, or looking at this one, you know, it tends to move. It's pretty, you know, can move quite a couple dollars in a day. So, you know, maybe it's like $5. Maybe it's like a $5 range, you know, 250 to above 360, maybe 250 below 360. I don't know exactly. You don't have to know exactly, right? You're not trying to prove things in a court of law. You don't need to prove things behind, you know, you know, leaving, what do they call, like a shadow of a reasonable doubt or whatever it is. You don't have to do that. You got to make money, right? Really understand this. Those are two different things. You do not have to prove anything in a court of law. You need to make money. You need to make a wise enough decision to make money. So that's what I see that we're probably, that's my first case is thinking it could do something kind of like, you know, I don't know, however it's going to go. You know what I'm saying? Go get yourself an ice cream cone if you want. Or better yet, get your significant other some flowers. Buy these flowers. Buy some flowers. Don't pick flowers. Just let those flowers keep growing. Buy some flowers with the money that you made from selling options. So so that's what I think. That's what I think is going to happen. Now, the one thing that could throw this off is if the government, quasi-government agencies, whatever you want to call them, if they start doing some sort of program that generates this, right? Because this right here, that was from the government. If you say, no, Brent, it was from the Federal Reserve, they're one and the same to me. This is from the government. That's not fundamental market stuff. It's government intervention right in there. So if they start doing some, and now I'm not, and please keep in mind, if they start doing this, make money to the upside. Don't wag your finger at them saying they shouldn't be doing it. Make that money, my friend. Make the money. If they don't do that, if they don't do some sort of quantitative easing, this is not QE, Operation Twist, if they don't come out with some hokey name for some reason they got to justify that it's not quantitative easing, it's not monetization of the debt, they got to come up with all these reasons to convince you that it's not that, but it gives you the same result, then who cares what name they call it? If you knock somebody out with a jab, and you don't call it a jab, you call it your whatever, your super striker, it doesn't matter. You got the same result. You knock someone out with a punch from your lead arm. Who cares what stupid name you call it? So don't get confused by these dumb names that they come up with in order to keep you confused. Right? If they're going to do some sort of program that's going to goose the stock market up to the upside, unless they do that, and I guess this is what you got to know, or what I think you should know, is that this is from goosing of the stock market. This is not because Apple came out with a new phone. That is not why that happened. It's not because everybody wants a Peloton, whatever exercise machine. That is not why that happened. This is from goosing the stock market. Let's say your buddy is in a really, really good mood. You think this person's really cheerful. Then you find out, no, this person's on drugs. It's not because they're in a really good mood. It's not because they're a cheerful person. It's because they're high on drugs. And you take the drugs away, whoop, and this is what happens, right? So just kind of keep that in mind. With that, my friends, if you want to kind of eliminate all this type of stuff, the easiest thing to do is sell yourself some cash secured put options on stocks you don't mind owning. And don't think of it as like buying a house. You're gonna live in it for 20 years, right? And in the first 5 years you're living in it, if the home value goes down, you don't run to your wife and say, we got to sell this house. We got to take a loss on this house because it's not worth as much as we bought it for. No, you're going to live in the house. It's providing you a value. And just like if you sell a cash secured put option on the stock and the stock goes down, Like if you plan on keeping the stock for the rest of your life, who cares what price it's trading at? Is it still paying you a dividend? Yes. More than likely, yes. If you pick a good stock. Okay, you guys have a fantastic day. I will talk to you later.